Let's dive into the crypto markets with eToro Market Analyst Josh Gilbert. Welcome, Josh.
Thanks for having me, Lawrence.
Glad to have you. So Bitcoin down 2% over the past 24 hours. Now we're trading below 27,000. Okay, what's this about and what do you expect in the short term?
Yeah, well, look, I think Bitcoin has ultimately remained pretty resilient over the last sort of couple of weeks with everything that's sort of been thrown at it, from sort of rising rate expectations, once again, as well as sort of this fallout from the debt ceiling. I think we're getting a little bit of weakness after the sort of the US jobs report that we had on Friday. I think it was a bit of a mixed bag of results. And I'm not sure it makes the Fed's job any easier, which is why I think we're seeing a little bit of weakness in Bitcoin and crypto markets today, because I think we've seen the expectations of a Fed sort of rate hike increase slightly there. And we've got to remember that, markets have been pricing in a fast fall in inflation and rate cuts by the end of the year. So this was a bit of a mixed signal. Now we've obviously got a Fed blackout period as well. So we don't sort of really hear more from those Fed speakers about what they think about this. And we were left with some pretty mixed comments from, Fed speakers over the last sort of week or so as well. Some saying that they believe that, 5% is enough and that we should, give that some time to ultimately, let it do its thing. But also we've got others wanting to sort of keep its foot on the gas. So, I think investors are feeling a little bit uneasy about sort of maybe what's ahead, with the Fed. And I think that's why we're seeing this weakness.
Yeah, we're looking here June 14th. I'm looking at the CME Fed Funds Tool chart here. It's about 2/3 of the market expects about everything, basically what they call a pause, where you're not going to raise rates. 25% think there's going to be a 25 basis point hike. You think you think that the majority wins. It's going to be a pause, correct? But do you think that maybe that as you said, this unemployment number came out? Do you still believe that? Do you still think there'll be a pause, or do you think they'll say, let's give it a couple to go?
Yeah, look, I think it is a real mixed bag there. I think that I'm not sure there's a lot of incentive right now for the Fed to sort of pause and then retighten down the line, but the markets do think that could be the case. I think that the downside straight away here for crypto specifically is that Jerome Powell does sort of keep his foot on the gas, because I think that changes expectations for rate cuts by year end. And I think that sort of changes this whole narrative that a lot of investors have ultimately had. And I think, as I say, that would, really put some weakness back into crypto, especially if we got this hike coming through. And I think that's what markets are sort of expecting now. I think the bigger tail risk here, though, is that we're seeing the dot plot open out. So those rate hike expectations, that this is sort of now changing to maybe not just one hike, but maybe opening the door to more hikes this year. And I think that's something that markets aren't pricing in. And I think that's where the risk does lie at this moment in time. As I say, though, I do think the jobs data was sort of mixed. So I think that then turns us to CPI data next week. I think inflation has been moving in the right direction. It might not be falling as fast as the Fed would like, but I think we're going to get an update on that number next week. I think they want some I think the Fed wants some reassurance that core inflation, which is sort of, I think, the focal point right now for the Fed, is falling. And if they get that, then that's going to be really important, because we had a great headline number last month, which I think has built up this expectation of a pause. And if we get a weaker than expected core number, then I think that does put through a pause right on the cards.
JPMorgan released a report last week suggesting that there's going to be strong retail demand for Bitcoin up until 2024 because of the upcoming halving. What are your thoughts here? Do you agree with the report?
Yeah, definitely. Look, I think we're starting to see investors sort of positioning themselves for the halving as well, right? I think retail investors are smarter than ever before. I think they're more significant to markets than we've ever seen before. Previous years gone by, retail investors have, always been sort of known as the dumb money, but that is simply not the case. And I think that, since its inception, the Bitcoin halving has been followed by a crypto bull market. And retail investors know that, crypto markets work in cycles, Bitcoin markets work in cycles. We've seen that over the years. And obviously the supply and demand considerations for Bitcoin, I think, obviously are that sort of key driver. And I think, as I say, retail investors know that. A big part of why retail investors buy this asset is for its scarcity. And yeah, I completely agree with the statement. I think investors are positioning themselves. I think in terms of where we are right now, in terms of current pricing, I think 20,000 looks too low, but 30,000 maybe looks too high, given sort of the sort of some of those economic and macro risks that we still have on the table. But I think what we will see is if we do get any weakness coming from Bitcoin driven by macro over the next couple of weeks or months, I think we'll see that being bought up by retail investors.
Now, the issue about the halving, though, I mean, this is something that's kind of ever since the birth of Bitcoin, we kind of knew roughly where we'd be in terms of rewards to miners. Is the reduction in the amount of coins that are mined every day that will happen next year, is that so significant that it would ultimately affect the market compared to the absorption? So in other words, the absorption rate, that the increase in demand in any given time, is it such that so overwhelming that the halving would be that significant? Or is it that the fact that these halvings occurred at weird times, are we looking at correlation equal causation, such as, I don't know, we had a halving and then a pandemic, which led to government printing money and everyone spending money and buying crypto because they were nuts?
Maybe we could put it down to maybe a bit of luck in terms of that. History doesn't repeat itself, but it certainly does rhyme. So I think that's, a really important consideration to take into account, because when we've seen these halvings, every time they have happened, we've had the same outcome. And I think that's what retail investors ultimately know. And I think, as I say, that scarcity is a huge part of why investors are buying this. And ultimately, we're only going to get ever so many halvings. And I think, when we've seen those halvings happen in previous cycles, and we've seen that sort of price movement for Bitcoin, I think retail investors don't want to sort of miss out on that opportunity. We've got a record high of Bitcoin at 69,000. We're significantly lower than that now. We've got a year for investors to accumulate up until that sort of halving time, because ultimately we're in a position right now where, yes, they say the Fed are probably keeping their foot on the gas a little bit. But once we start to see, this environment become, more friendly for crypto and risk assets. So we think towards the end of the year, when inflation is significantly coming down and rate cuts do start to occur, that's when we're going to start seeing that movement, I think, really significantly with crypto, but obviously more specifically Bitcoin prices. And investors want to sort of be ahead of that. And I think that's why we're seeing, investors position themselves, for this halving ahead of time. As I say, they're smarter than ever, and they understand what this halving could mean for Bitcoin's price.
Josh, thank you very much for joining us this morning.
Thanks for having me, guys.
That was eToro market analyst Josh Gilbert.